Hi, I'm Jennifer with Tax TV, here with some information about S Corporation distributions to its shareholders. S Corps are set up to pass all income and losses through to its shareholders, who are taxed on their share of that income, whether or not amounts are actually distributed. In other words, when a distribution is actually made, we need to know more to determine whether the amount is taxable. When distributions by an S Corp are made with no earning and profits, the amounts are tax-free to the extent of the shareholder's adjusted basis in the stock, because this amount is considered a return of the shareholder's investment. If the distributions exceed the shareholder's adjusted basis, then the excess is treated as gain from the sale or exchange of the stock and is normally taxed at capital gain rates. The shareholder's basis in the stock is then reduced by the amount of any distribution that is not included in income. If the S Corp has earnings and profits, the tax implications are a bit more complicated because the taxation depends on the accumulated adjustments account. In general, this is a running total of the undistributed earnings that have been taxed to the shareholders since the corporation made its S Corp election. Any distributions made to the extent of the accumulated adjustments account are treated similarly to distributions by an S Corp without earnings and profits. First as a tax-free return of investment, then as gain from the sale or exchange of stock. Any distribution in excess of the accumulated adjustments account is first treated as a dividend, to the extent it doesn't exceed the S Corporation's earnings and profits, and then as a gain from the sale or exchange of stock. The distributions can be made either in cash or property. It is important to note that if property is distributed, the amount will be in the fair market value of that property on the date of distribution, with the shareholder taking a basis in the property equal to that fair market value. If the distributed property has increased in value, the corporation is subject to tax based on the extent of such appreciation. As a result, S Corps are not the preferred entities for owning property. For more information about the taxation of S Corps, search taxtv.com.